Are you buying an electric vehicle through your limited company to save tax? Here is the truth. In today's video, we're going to explore the tax implications for limited company directors purchasing an electric vehicle through their limited company in 2025. The first thing to think about is what we call first year allowances. If you buy a brand new, and it has to be brand new, a brand new electric car, then you would qualify for 100% relief in year one. And what that means is the cost of the car would be included in your taxable profits to effectively reduce your taxable profits and therefore reduce your corporation tax liability in year one. If you buy a second-hand electric car, you don't qualify for 100% relief in year one. What you would be eligible for is 18% relief under the capital allowances scheme. And what that means is you take 18% of the company car's value and deduct that from your profits each year. And so what that means is you don't get the tax benefit all up front. It's effectively staged at 18% over consequential years. So that's the first point. The second point is around benefit in kind. Benefit in kind, if you use a company car for any personal use, or if it's available for personal use, then you will incur a benefit in kind. And what this means is that basically you pay personal tax on the vehicle. And the way that it's calculated, the way the benefit in kind is calculated, is it takes the list price of the car plus any extras, and then it's multiplied by a percentage. And that percentage is determined by the type of car that you're using. And the good news is for electric vehicles, the percentage is lower. For EV cars in 2025-26, that percentage is 3%. That's rising to 4% in 26-27 and 5% in 27-28. But even at 5%, that's still significantly lower than what you'd pay on a normal or standard petrol or diesel car. So the benefit in kind is actually really favourable, but you do need to factor that cost in because you're going to pay that cost personally on your tax return. So the cost will go onto your tax return and you effectively pay tax on that at your marginal rate, whether that be 20% or 40%, depending on where you are as a UK taxpayer. The next area is vehicle excise duty. So previously, the electric cars were you didn't pay vehicle excise duty. It's effectively car tax at all. That has now changed. From the 1st of April 2025, you basically pay £10 in year one and then £195 from year two. And also bear in mind, if the car is over 40k, then the expensive car supplement also applies in years 2 to 6 on your vehicle excise duty. The next area is the running costs of electric cars. Now, this does depend, it does depend on how you're charging your car. So you can charge your car at your place of work and there is no benefit in kind or benefit associated with that. And typically, if you're charging at home, normally what you do is you would charge it overnight and hopefully be on a reduced rate electric tariff on an overnight rate, which would then be beneficial to you. Where it does become more expensive is if you're charging on the road. So if you're using motorway charging points, for example, they tend to be more expensive, or they are more expensive. So just be aware of that and make sure you're smart in where you are charging your electric vehicle. The next thing to consider from a tax perspective, VAT. So the VAT rules on electric cars are basically the same as for non-electric cars, so petrol and diesel cars. And what that says is if there is any private use of that vehicle, then the VAT, any VAT would have to be paid on that vehicle. So basically you can't reclaim the VAT on an electric vehicle if there's personal use. If it's 100% business use, then potentially the VAT is reclaimable, but just be careful with that because it's often quite hard to prove that that the car is 100% business use. Also on VAT, if you are leasing the car through your business, then you would potentially be eligible for 50% relief on the lease payments for the VAT component. So the whole lease payment will potentially be allowable for corporation tax, but only 50% of the VAT would potentially be allowable. So you'd be able to recover 50% of the VAT on those lease payments. And that's what leads us into the next point. Do you buy the electric car for your company, or do you lease the car for your company? If you buy the car, then the capital allowances that we were talking about earlier would apply. So it'd be, if it's brand new, it'd be 100% relief in year one. If it's second hand, then you're going to be looking at 18% over years 1, 2, and 3 for subsequent years. If you're leasing it, then the lease payments would be eligible for corporation tax relief. So they would basically go into your accounts as a cost. Those lease payments then reduce your profits, and therefore you would get your corporation tax relief that way. So those are the key considerations that you think about when you think about buying an electric car through your limited company. If we can be any help or provide any advice when you're making that purchase, just bear in mind that some of those purchases are big, those cars are big, and therefore the tax implications are big. So make sure you're doing your research before you buy it. And if you do need advice, reach out to your accountant or get in touch with us.